everybody. Thank you so much for joining us today. Bob Carillia here, one of the partners at Rizolve Partners, and I'm here talking to Steve Cummings, CEO and founder of Rizolve Partners. And today, well, first of all, welcome, Steve. It's always good to chat with you.
Thank you.
Well, today, we're going to be talking about the turbulent times that we live in. It's impossible not to turn on the TV or open your phone without getting a story about the challenging times, whether it's tariffs or elections or any other number of things. And let's face it, that creates a lot of uncertainty in the marketplace. And, for companies who are trying to navigate their way through these uncertainties, it certainly creates a lot of opportunity for discussion. And that's what we're going to have for the balance of this podcast. So, Steve, let me open up with a question, and that would be to, with all this uncertainty that we're talking about, all the upheaval in the world at this time, what's the right strategy for a company? Should they adopt an austerity program right now, or should they just, conduct business as usual and see how things go? What are your thoughts on that?
Well, these certainly are unprecedented times, Bob. I can't remember situations like this in my lifetime. So it's really a new situation for everybody, and business owners have to to readjust to the new reality. I think that people, management teams, need to coalesce, on a Monday morning or whenever the meeting is, and discuss the impacts of the geopolitical situation that is descending upon us. There are many uncertainties, so I don't think there are any givens right now. I think that you have to make sure that you have a margin of safety as a business owner or as a CEO in order to weather any immediate challenges. So making sure that margins of safety, like the cash balance, keeping hold of your cash, making sure that any lines of credit are fully available to the company, and making sure that any need for access to further funds, be it from friends and family, be it from institutions and so on, are available to the company. So that's what I would do straight away, is make sure the margins of safety are in place and actively manage that.
Right.
The second thing is to take a look at your own particular niche in the market and figure out what the immediate impacts of all of the news flow are. For some companies, they're in a crisis management situation. For others, they are not in that situation, but they may be affected either directly or indirectly downstream, upstream, with suppliers being impacted or with customers being impacted. So I would recommend that a survey of the hinterland of impacts occurs. And then I guess, without going in too deeply into it, I would take a look with the team at the plans that you've laid and make a fairly quick assessment as to whether those plans are impacted. And if so, whether there's a need to adjust the plans, be it a pivot to a new set of planning arrangements, or whether known impacts affect assumptions and therefore whether reduced profitability, reduced sales, reduced growth, and so on and so forth is going to impact the situation that companies facing. So we can talk about a lot of things, Bob, but those would be the immediate things that I would be looking at.
Okay, no, fair enough. You know what? Just drilling down on one of those things. I've spent much of my career on the sales and marketing side, general management side as well, but so much time on the sales and marketing side. And one of the areas when companies do choose to amend their plans because of situations in the marketplace. One of the areas, or two of the areas, I guess, where they often focus is on employee development and also marketing. In a normal market, those are great things, to do. The budgets are there, but what do you do in a situation like that? Because those are still very important initiatives, to build your business and to build up your resources. What are your thoughts on that when it comes to, both employee development and marketing?
Well, again, I think it depends on the situation that the particular company faces. If there's a crisis being faced with segments of your income stream being obliterated for a period of time, either because goods or services are not crossing borders, or if planes are being sent back, as unaccepted deliveries. All of those things are fairly big holes in the expected profitability, and good managers need to respond to that. Either we need to find new sales to maybe in different countries as opposed to the offending countries, and if some of those can be actioned immediately, then that's an immediate response. If the costs of the company, though, are too heavy in response to reducing or sales that have just evaporated, then action needs to be taken. One way, as we all know, of cutting costs is to go to the marketing line. I never subscribed to that myself, and because marketing is the lifeblood of blood of the future. But it is certainly a way that you can cut costs initially. Temporary hirings can be another area where costs can be cut. Training programs, once again, these are all things that deliver value in the future, but in the short term, you may be able to trim some costs like that. But from a value perspective, none of those, I don't like any of those strategies. But in the case of a short-term need, then that might be something people employ. By the converse, Bob, though, on a more positive note, if really the impact of the geopolitical situation is to extend the time frame of expectations out. So, for example, if an owner wants to sell the business in a couple of years' time, or maybe we're looking to enter into a transaction in the next 6 months, maybe what happens is that time frame extends out. If that's the case, then as an owner looking to maximize value, one needs to ask the question, what are value creating strategies that we could fire up over the next 6 to 12 months? In other words, in that gap period, what value creating strategy could we implement? And it starts to raise the question on, should we invest more in marketing to improve the top line, and so on and so forth. So I think it depends on the company, and being agile and maybe pivoting to different plan strategies is maybe the order of the day.
Yeah, you know what? That's a really interesting perspective, because so often, we tend to look at, how do we cut costs and how do we do this and how do we stop doing something? But when you think about it, turbulence in the market, upheaval, the way we've got it right now, is also an opportunity to step back and take a look at your business and determine where are you creating value, and what lines are actually generating good profitable revenue, and what what programs that you run are actually delivering the results. So often when times are good, you get so busy, you've got a big order board, production's going full tilt, or the services that you're delivering are well subscribed to. You don't have time to actually step back and take a look. So in a way, this is an opportunity for a company to step back, make some really good decisions as to what is driving value in their company, and to focus on that. Make sure you protect that side of the business and maybe downsize, cut away some of those other pieces that really aren't, creating value in the way that you'd like it to. It's a great perspective.
A prime example of that was during the COVID period, Bob, as you and I both know. What we did see is that the really good companies doubled down on building quality in their business during slower periods or periods of uncertainty, and really invested in improving the intangible assets in the business. And those were the businesses that we saw accelerating out of a difficult situation later on when they'd done those improvements. So I really like that thinking, and at Rizolve, that's we focus on that type of thing. But lots of different ways that we can approach the uncertainty. Remember that when we have uncertainty like this, what that means is that the risk profile on business risk goes up. If business risk goes up, then the discount rates that the market applies to businesses to value them goes up as well. If discount rates go up, value comes down. So that's what you see with uncertainty. That's what you see when the market comes down. It's because the market perceives higher levels of risk. And often investors become skittish, right? And they'll sit on their hands and do nothing until the uncertainty passes. Or if they're making decisions on acquiring assets, buying companies, and so on, what they do in volatile periods like this is demand higher quality.
Right.
So if business owners work on quality and improve quality, then they are addressing the things that investors are looking for during those tough times.
Right. Well, and we've talked about, investing in your employees. We've talked a little bit about, marketing and building your brand. Any thoughts on what other things during this kind of a market, any thoughts on what other things a company can do to build value?
Oh, for sure. Well, certainly we want to make sure that the planning process is realistic and is facing up to the realities of today. So if a plan's been put together and the company's working the plan, then highly recommend taking a look at the plan assumptions and seeing what's changed, and bringing a reality to bear back on the reforecasted results. Why is that important? Because all of the stakeholders surrounding the business are going to want to know what the latest situation is from the CEO, from the management team, and so on. And so having a view on what the latest situation is for the company, what the prospects are, and how they've been evaluated is important. Shareholders want a report, they want an update. If it's not annual, then it's quarterly or even monthly, depending on how often they have an expectation to be reported on. Employees want to know through the town halls, the communication channels. The employees want to know. They have their own uncertainties in life, and what they want to make sure of is that their paycheck is as certain as it can be. And so they want to hear from the CEO and the management team, how all this malaise is affecting, the company. Bankers may want to know, they've got a portfolio of clients with loans outstanding and so on. They want to know how the situation is affecting their business and their security over the loans and so on. So there's a broad constituency of people that want to know. So I'd certainly want to make sure that there's an appraisal of what it means for the company, and it's relatively up to date.
Mm-hmm.
Beyond that, I do think. I mean, I think wellness of your employee base, your human assets, is key to success, and making sure that their concerns and so on are taken care of is important in the modern world, particularly with the younger generation that maybe haven't seen these types of circumstances, and it's pretty scary, for younger people that just take on big mortgages, maybe have a family that they've got to look after, and so I truly believe you got to take care of your human resources who are driving value in the business. I think other areas would be up for discussion, would depend on the particular circumstances of the market that the company faces.
Yeah. Well, it's interesting. I mean, the things that you've mentioned, I made a couple of notes here, having a plan, leadership, demonstrating leadership, to your shareholders, to your employees, to your vendors, to your clients. Communication, super important, always important in times like this. And then making sure that, one of your biggest assets, i.e. your employees, are secure and looking after their wellness are all critical things. And that makes perfect sense. What's interesting, and I know at Rizolve, we are very big on whether the times are booming or whether there's some challenges in the marketplace, having a plan is critically important. And I know that we work with a lot of our clients to put those plans together year after year. And sometimes you look at the effort that goes into it and you say, well, are we creating just something on paper, or is this something that's really useful? In a downturn, I mean, if you've got a plan in place and we get into a downturn as we are right now, what's the value of that plan? I mean, you've talked about it a little bit, but what's the value of having that plan in front of you so that you can look at it and proceed from there?
Well, whenever we're talking to a new client, as you well know, Bob, we preach the value of a plan, and we see it in action during the year. The reality is that making decisions when you have put together a good plan that is realistic, making decisions is an awful lot easier. If you have a plan and we go through turbulent times like this, then often good quality companies put different scenarios together. Worst case scenario, best case scenario, and what the most highly likely alternative is for the financial outcome for a year. And what that does for a CEO and a management team and the employees when they see it, perhaps, and the other stakeholders, the bankers and so on, what it does is to showcase how different scenarios will turn out financially for the business. Mm-hmm. That then feeds into margin of safety. So, for example, if the business is affected badly by politics and so on, if it's affected badly, then the question is, well, how much is the effect? What is the reduction in cash? What is the reduction in profit, and so on and so forth. Once those yardsticks have been calculated by the team, and it's not just the finance team that do that. Sales and marketing and operations all have a part to play on evaluating the assumptions and the impacts and so on. Once that's done, then it gives a range of alternative outcomes that feed into the decision-making process of the CEO and the team, on whether decisions can be positively taken or not. And that certainty over the ability to execute on a decision is very valuable, very
Mhm.
valuable indeed. And it's valuable to the communication process so that, people, when they see big decisions being taken, they can be explained, and the costs and benefits around the decision can be showcased. And I think for everybody involved with the company, everybody that has a stake in the company, those types of things are very important. From a value perspective, if the company is in play and on the market and so on, having plans is very valuable. Being able to showcase what the future look on the business, and how growth will turn out and what the financial effect of growth will be. Those types of documents, of models, can be appraised by future investors, and they absolutely deliver value through the buying process. So, from lots of perspectives, having a plan, and we've seen it in action, Bob, haven't we?
Yeah.
Having a plan is creates a lot more certainty.
Yeah, we have. And you know what? As you're saying it, I've got this picture in my mind. Every day, it's really a roadmap, isn't it? And when you think about it, every day we jump into our car, and many of us plug, a destination into our GPS, and our GPS is a roadmap which tells us how to get from A to B in the most efficient way. However, if there is an accident ahead, or if there's weather, or if there's traffic, your GPS will give you alternatives, and you can make a decision with some confidence that if I take this alternative route, it'll still get me there, albeit it might be a little longer. At least it'll be perhaps a safer route, and will still get me to my destination. So that's kind of a picture I've got in my mind. Let me ask you another question, because you just mentioned it as well. Let's assume that an owner of a company, as part of their plan, was to put their company up for sale, say 12 months from now. And they made that decision maybe a year ago. They said, okay, I'm going to do some work on the company. They could be working with us, and we're helping them create value in the company, and building quality services and processes and so on. But they've made the decision that at the end of this year they were going to put their company up for sale, and yet now they're into this situation where the next year looks very uncertain. What would you recommend to somebody like that who has got that decision to make, where the plan isn't changing? It's just, what do they do now? Do they plunge ahead? Do they hold back? What do they do? What are your recommendations, Steve?
Well, we always advise our business owners to have a multidisciplinary advisory team, Bob, don't we?
Mm-hmm. Yep.
So the plan is typically comprised of the thought processes around the plan, the liquidity plan, the exit plan, have been drawn together by business professionals like ourselves, with lawyers, transaction lawyers in place, with personal financial advisors, who work out what the wealth situation of the owner is before and after the transaction.
Mm-hmm.
So and typically we have an investment banker around the table, the company's accountant, and so on. So there's lots of skills around the table to help a business owner, through an uncertain situation, for sure. I do think that situations will be different, depending on the owner. The wealth situation may be different. The quality of the company's assets may be different. The sector of the economy that the business trades in will drive a different financial result, and so on and so forth. So I think having a strong advisory group to help you steer through the choppy seas is important.
Mm-hmm.
The other thing that will most likely be debated amongst that group is timeframes. Is 12 months to transaction date still appropriate? Maybe there's a need to liquidate in that time frame because of health concerns or family situations, and so on. So it may be that the time constraint is fixed. If that's the case, then expectations of the owner need to be managed, because as we just said, with uncertain situation, risk premiums go up, discount rates go up similarly to account increased risk, and therefore values come down. So the market, typically would bring lower values. Having said that, if this company has been prepared well for a transaction, if there are no blockers to reduce value through due diligence, then the company should still attract a market multiple,
Mm-hmm.
albeit that the market multiple goes up and down with the market. So liquidity should still be available. It'll just be at a different level. And then the final thing to think about is whether the market itself is a liquid market, or whether the market has literally dried up. Investors are skittish. They don't want to touch anything. They're sitting on their hands, and what that is going to mean is that there's the potential for forced sale prices to occur, and that reality has to be faced up, or the time constraint needs to be changed in order to kind of get over the forced sale prices and get back to a regular market. So lots of things to be talked about in the face of headwinds. I think it's always the case that good quality companies will find a buyer in the market. They will find a buyer, and prepared in the right way, with all of the inherent advantages that are being sold into the market. A reasonable price should be doable, and so it really depends on preparation, Bob.
Right. Well, and of course, you and I, in the 30 plus years that we've been in business, we've seen these headwinds, we've seen these challenging times before. You can go back to a number of recessions, the whole Y2K crisis, the tragedy of 9/11. You mentioned COVID. Of course, there was also the financial crisis of 2008. And if you take a look at all those, boy, those are all desperate situations when you were in the middle of them. But as we've discovered, those times do pass, and you may have to pivot because things change. But things change not always for the worse. Things change for the better. There's lots of opportunities that are created. So for someone who is looking to sell their business, again, it's just a matter of timing, because these things will pass. But it also gives you that additional period of time to address any other, issues in the company that you might want to take a look at, continue to build quality. So Steve, this is what we do at Rizolve. And if somebody were to knock on our door, tomorrow and say, look, I want to put the company up for sale. I want to build value in my company over time. A couple of questions. Starting from, even in this marketplace, starting from today, how much time should they give themselves to build that value, so that when they do put their company up for sale, they're going to maximize the return that they get? Number one. And then number two, what are some of the first things that we would do with them to get the ball rolling, which might be very advantageous? If the market's down a little bit, they may have a little more time to focus on these things. So number one, what's their time frame? Number two, what are some of the things that we would do for them, to get them going?
Well, time frames do depend on the circumstances. We have one client that is we've been preparing for sale right now. and the time frame to the transaction was about 12 months preparation,
Hmm.
which is, and then another 12 months to execute on the transaction with an investment banker. So 12 months, 6 to 12 months is absolute minimum from our perspective. And what you need to understand then is that for that kind of a time frame, um, the situation that the company has needs to be relatively ordered in order to not attract price discounts
Right.
through due diligence. Um, I would say that for a normal mid-market company, a minimum of 3 years should be allowed. A minimum of 3 years. Why? The typical constraint um, is the tax planning. Tax planning needs to be done ahead of any contemplation of a sale, any documented contemplation of a sale, and that is absolute minimum 2 years.
Mhm.
And getting that confirmation from a tax lawyer, is a tricky one, but that's kind of rule of thumb, really. So, to tax planning, you need a minimum of 2 years in order to optimize the net after tax cash from the sale. Couple of years then of closing any value gaps. If the business owner has an expectation of a particular value in the business and the market thinks differently,
Mhm.
represent a value gap in our terminology. And to actually close those gaps would typically take a minimum of 2 years, depending on what the issues are: owner dependence, customer concentration, poor quality financial records, and so on and so forth. In order to clean each of those three types of issues out of the system, you need minimum 2 years, and possibly longer, possibly
Right.
longer. So it really does depend on the circumstance. In a perfect world, and it goes by quickly, we would say 3 to 5 years prep. In that 3 to 5 years, we would have a high confidence of at minimal doubling the value of the business.
Mhm.
Um, and so there's a value payback to that kind of planning, forward planning period. But absolute minimum, Bob, 2 to 3 years in order to optimize tax. Um, if a business owner is intent on bringing the business to market and they
Right.
only have 12 months of prep, we can work with that, but it would be likely be suboptimal because taxes won't have been optimized, and there may be some issues in the business that we just can't step over because of the time constraint.
Yeah. So that makes perfect sense. And of course, anyone contemplating, a change, don't hesitate. I mean, certainly reach out to us, and we'd be happy to discuss, their situation with them. Steve, just in closing, is anything that we haven't covered that you'd want to cover? I think we've covered a lot of different issues and opportunities, even in a down market. But anything else that you'd want to put on the table before we bid farewell to our viewers?
Well, I mean, let's just reprise what we're in a very difficult situation right now, geopolitically. That's going to affect different businesses, supply chains in very different ways. I think you have to take stock of your particular situation and how you're affected. Service businesses look like they're getting away scot free right now,
Mhm.
and product businesses that have cross border trading look like they could have challenges to face with tariffs and so on. If your market is within a particular country and not cross border, then less of an impact, more kind of supply chain type concerns potentially. So it really, assessing the situation, assessing the circumstances that you face, and the hinterland of relationships that you have is the order of the day. Ceiling testing your plans to make sure that they're good plans and that you have a strong view on how the company is going to be affected is going to serve you well for the future. And I think finally, we would preach that in these uncertain times, working on the business, building quality in the business, retaining your key employees, making sure that you've got stable relationships, making sure that you've got good contracts that are agreeable to both parties. All of those things are really good uses of time in an uncertain market and will stand you step for step in the future. Making sure that you have a good safety margin, so that you can ride through the rough waters. There will be better times ahead. How long that will take, we don't know. But steering your way through those things with a good plan, with good relationships, is going to stand you in good stead. So I mean, take stock of your situation, keep calm, speak openly, communicate well with your teams and your strategic partners, and good information will flow in order for you to make good decisions to carry the day through this somewhat of a crisis.
Right. Okay. Well, on that very positive note, this is probably a good place for us to wind things up. So, Steve, I want to thank you as always for your great counsel, your great thoughts, and for those of you who have taken the time to watch us, we thank you as well. And if you are interested in hearing more about this, you can reach out to Steve or myself through our website, www.rizolve.ca. Or if you're watching this on LinkedIn, ping us, and we'd be happy to connect with you and continue the conversation on a one-to-one. So again, thanks everybody. Thanks, Steve, and we will see you soon. Take care now.